Today, we're digging into a pretty wild day on Wall Street. A sudden geopolitical flare-up sent absolute shockwaves through the market. So what happened? What does it all mean? And maybe most importantly, what are we watching for next? Let's break it down.
Okay, so let's dive right in. The entire story of the day really kicks off with this pretty stark warning. You've got escalating military conflict between the US and Iran, and suddenly, boom, the world's entire energy supply feels like it's at risk.
Right, so this wasn't just some distant headline you could ignore. No, this had immediate, very real fears attached to it, and those fears just rippled through the entire market.
So you might be asking, what exactly were investors so scared of? Well, it really boiled down to these three massive threats. First, a potential blockade of the Strait of Hormuz. That's a critical artery for global oil. Shut that down? That's a nightmare scenario. Then you've got oil prices themselves, with the very real threat they could spike towards $100 a barrel. And all this brought back these ghost stories of a 1970s-style energy shock. You can see why people were hitting the sell button.
So how did this fear actually translate into numbers on the screen? The market's reaction was fast and it was brutal. But, and this is the interesting part, the day's story, it definitely didn't end there.
At its worst point, the S&P 500 was down a staggering 2.5%. Now, that might not sound like a huge number, but to put that into perspective, we're talking about wiping out over $1.5 trillion in value. It was just a massive, massive wave of selling, but then something changed. Buyers started to see an opportunity and they stepped in. This led to a really significant intraday recovery of over 1.6%. Think about that. The market clawed back a huge chunk of its losses. Now, it's still closed in the red, but what this really shows you is this incredible tug of war playing out in real time between raw fear and, opportunistic buying. Okay, to really get a handle on the level of panic, we have to talk about the VIX. You've probably heard it called the fear gauge. Basically, when the VIX goes up, it means traders are betting on bigger, wilder price swings ahead. It's the market's way of saying, whoa, uncertainty is through the roof. And the chart we're about to see shows this perfectly. And wow, just look at this chart. This is the panic in action right here. See that massive spike? That's the VIX, the fear gauge, surging over 30% at one point. It peaked way up here, hitting a high over 28 before, thankfully, calming down a bit by the close. This just perfectly visualizes that intense nervousness investors were feeling right at the bottom of that sell-off. All right, so what did all this up and down volatility mean for individual stocks? This is where the story gets really interesting, because all this uncertainty created this really tricky environment of pure indecision, even for some of the biggest names out there. And as you can see, this wasn't just a problem for, say, tech or financials. Nope, this chart is just a sea of red. The sell-off hit pretty much every single sector. The uncertainty was everywhere. There's actually a name for this kind of market, a kangaroo market. And it's a perfect description, right? Prices jump way up, then they slam back down, but they don't actually go anywhere. They're just bouncing around sideways in this wide range. It's incredibly frustrating if you're looking for a clear trend, and it's an absolute minefield if you're trying to trade it short term.
So let's take a look at a market heavyweight like Apple to really see this indecision play out. We often look at giants like Apple because their performance can tell you a lot about the whole tech sector, and really, the market as a whole. And what do you see? Notice how the price is just getting squeezed. You've got sellers pushing it down from these lower highs over here, but then you have buyers stepping in and creating these higher lows down here. It's getting tighter and tighter, like a spring coiling up. It's the classic picture of a market that just cannot make up its mind.
And it's a really similar story for another tech giant, NVIDIA, which, is a key name for the semiconductor industry and overall market mood. It's just bouncing between this clear floor of support down around 170 and this ceiling of resistance up near 195. It's stuck. It's in a holding pattern, just waiting for some kind of catalyst to break it out one way or the other. So with all this uncertainty swirling around, where do investors look now? They're basically laser focused on a few key signals to try and figure out where this market might be headed next.
First up are the technicals. So where are the key battlegrounds we need to be watching?
Well, take a look at these levels for the big indexes. For the S&P and the NASDAQ, these price floors and ceilings are basically the lines in the sand. The billion-dollar question is, will buyers hold the line here at support, or are sellers going to punch right through? This is what traders are absolutely glued to right now.
So really, when you boil it all down, the path forward seems to depend on these three big things. First, and this is the biggest question mark, the geopolitical situation itself. How long does this go on? How intense does it get? Second, we've got key economic reports coming up, like the jobs report. That's going to tell us if the underlying economy is strong enough to handle this kind of shock. And finally, everyone is just watching those charts, waiting to see if we get a decisive break, either above that resistance or below that support.
And this really leaves us with a final big question. In a market that's being driven by conflict and headlines, is uncertainty the only thing we can really guarantee? It seems that when global events take center stage, the biggest challenge for investors isn't just about picking winners and losers, it's about navigating the raw unpredictability of it all. And that right now is the puzzle everyone